Back in December, Accenture and the City of London Corporation launched a report entitled The Future of Cyber Insurance, Next Steps for the London Market, which looked at the topic of cyber insurance and London market's place within the global market and what it needs to be doing to progress its position within the global market and how it best works with all the local markets like Latin America. So today we are excited to be having this discussion with the local markets, and we want to look at how we best share the benefits of London's scale and expertise with businesses in Latin America. So in this session, we'll be focusing on the report and discussing on how to best partner with brokers and businesses across Latin America. I will hand over to the Right Honourable The Lord Mayor for some initial remarks, and then I will take over and we'll start a discussion with our distinguished panelists, which I'll introduce right after the initial remarks. Lord Mayor.
Thank you very much, Max, and I'm just very keen to stress how important this is for the City of London. Cyber is a sector that we have done a lot of work for, and thank you to our panelists and audience for taking time to join us to explore the challenge presented by cyber risk globally and the opportunity for a deeper partnership between Latin America and London's insurance market. I'm always reminding people that the London insurance market is 27% of the GDP of the City of London. And it's developed, as you know, Lloyd's of London's founded in the coffee shop in our great city and has developed over the centuries alongside its UK. The comprehensive cyber security ecosystem has also allowed London to emerge as a global leader in the cyber insurance space. And London represents almost 8% of the global commercial insurance market, and the UK's cyber security market is the most concentrated and accessible European centre in this space. And we're confident that with substantive insurance markets in countries across the region, like Mexico, Chile, and Brazil, which has become the world's 14th largest insurance market in itself, and the increased focus on cyber security, we see Latin America as a whole and cyber insurance can form a key driver for an even deeper relationship between London and Latin America. And it adds another dimension to our relationship, and it's a crucial one in this time of rapid digitalization, as managing cyber risk becomes a focus in technology centers like Sao Paulo and Mexico City, as much as in the UK. The rapid digitalization across sectors has been accelerated everywhere because of COVID-19. And like across the globe, this digitization of business has led to an expanding threat landscape in Latin America as well. While cybercrime costs around $450 billion globally per year, recent estimates suggest that in Brazil alone, the year 2023 will mark an astonishing $100 billion in lost revenue due to cybercrime. In London, we've witnessed a similar development, with cybercrime becoming the second major risk that financial services faced, just after political risk. And since the COVID-19 pandemic, cybercrime has grown from a considerable but manageable problem into a major threat. In the lead up to August 2020, in the UK, for instance, more than a quarter of the incidents responded to by the National Cyber Security Centre were COVID related. This serious threat landscape and a rise of awareness on cybersecurity mean the demand for cyber insurance is growing fast. An increase in remote working, greater demand for digital services, and overall accelerated uptake in technology has meant business rely on their digital networks more than ever before. And with the damage caused by the pandemic, businesses cannot afford the risk cybercrime poses to them, especially now. It is therefore clear that insurance against cybercrime has a key role to play in the current market and will only become more important. Insurance is, after all, the best and most deeply embedded tool we have to manage both commercial and private risk. And it has a long history of adapting to new trends in the market, including digitalization. In London, we are eager to seize this opportunity to enhance our already expansive relationship with Latin America markets. Latin America and the UK have much to offer to each other in terms of experience and talent. We believe cyber insurance, especially, to be an area in which to expand our relationship, with cyber risk obtaining increasing attention throughout Latin America and the London market, being the long-established global leader in commercial insurance with a world-class insurance ecosystem. Our wealth of underwriting expertise, innovation, capital, market infrastructure, and prudent regulation form the basis for a key leading position in cyber insurance as well. London is the only place in the world where every one of the world's 20 leading insurance and reinsurance firms are represented. And the Lloyd's market operates across 200 countries. Moreover, the UK is home to an extensive range of technical cyber security services, incident response units, cyber specialist law firms, and PR firms. As always, a huge factor in achieving the cyber and insurance success in London has been our ability to produce and attract talent. Much of this talent, as you know, has come from Latin America. Latin American students have long been drawn to London's world-leading universities, whether it be Imperial College, UCL, King's College, and Royal Holloway, all being recognized as academic centers of excellence in cybersecurity research, two of them having specific centers for doctoral training. We are confident that these centers will provide a new, even savvier generation to address the challenges posed by the cyber threat landscape, meanwhile contributing to our partnership with Latin America in this space. Ladies and gentlemen, once again, thank you very much for joining us today. Back to you, Max.
Thank you very much, Lord Mayor, for this very insightful introduction. So I will now spend a few minutes introducing some of the key themes in the report we recently published with City of London and exploring some of its key themes before we move on to the Q&A with our panel. So firstly, some context and logistics. The report is available on the City of London Global City website, and a link will be made available to all participants. We decided to call this report The Future of Cyber Insurance, Next Steps for the London Market, because we really feel now is a great time to be discussing and promoting both the future of cyber insurance and the London market's position and how it can add value to markets around the world, including Latin America. The cyber market is certainly going through a period of great change at the moment, with the rise and evolution of ransomware attacks, more sophisticated threat actors, and new extortion tactics are forcing the market to respond. Rates are rising and limits are reducing. This is happening alongside the increasing digital transformation and growth of clouds, use of IoT devices, remote working, and the soon arriving 5G. So the need for a well-managed cyber insurance market is arguably greater than ever. And in the report, we make the case that London really has a critical part to play in this story. So I want to just outline 3 key messages in this report that I hope you find interesting, and hopefully can be part of the discussion later on as well. Firstly, although global competition is fierce, London has a competitive advantage in this market and the opportunity to establish itself as a global hub, because really it's the only city in the world that has both a global insurance market as well as a leading ecosystem of cybersecurity, law firms, and technology players in the same location, as the Lord Mayor mentioned earlier as well. The reason this is so important is because increasingly clients, and I see this all the day, every day in my job at the moment, they are demanding holistic cyber protection solutions, not just insurance. And this is evidenced as well by the rise of companies such as Coalition and AtBay in the United States, which combine insurance with cybersecurity protection services. And we've seen some explosive growth in that segment. In addition, the expertise the ecosystem can provide to carriers in terms of risk selection is becoming ever more important. And the attraction of our legal system and our legal professional services are evident and important in this market, as well as many others. Secondly, London has an opportunity to take the lead in addressing some of the challenges in the cyber market today, and those challenges are global. For example, it remains very difficult to price and assess cyber risk in the way other lines of insurance do, because of the rapidly changing nature of the threats and the limited data available. But with 25% of the global market passing through London, if we can aggregate some or all of that data together, then there is huge opportunity to better assess risk and protect clients. And for a risk that is global, such as cyber, there's an argument to be had that a significant in size global center of insurance that aggregates data from all the regions, from Latin America, from Asia Pac, from all the different regions, can bring benefit not just to London, but to the entire market globally. Another example is the absence of cybersecurity standards that consistently underpin cyber insurance products. Such commonly agreed and recognized standards, as well as the endorsement by insurers of a possible minimum sets of security standards, could encourage greater cyber resilience amongst insureds, wherever they are. Thirdly, this opportunity to further grow London as a cyber hub will only happen with cross-industry collaboration between the insurance markets and the wider ecosystem. And it needs coordination from a body such as the City of London, the custodians of the square mile in which many of these stakeholders are based, to help do this. For example, on data sharing, we need to design the appropriate standards, principles, and controls and security on this sensitive information and determine the incentives for market players to participate. But this is not a zero-sum game. It's an opportunity for all the market participants, wherever they're based, to benefit from the overall growth of London as a cyber centre. And we're very excited to see the City of London put themselves at the front of this agenda and to offer to drive this forwards. So those are the 3 key points. I hope the report can be a call to action and it will be useful, will help get the market working together in a way that will deliver on the promise of London as a global leader, helping and serving the entire global market. So with that in mind, I will now talk about some logistics in terms of the rest of the session. We will have a panel discussion. We have a distinguished set of panelists with us today. Sarah Stevens from Marsh, leading the media and technology practice. Paul Gooch from Tokio Marine Kiln, cyber underwriter, as well as Alistair Clark, executive director and team leader for cyber and commercial at Aon. Both all participants with a very long and distinguished history within the cyber insurance markets. Very excited to have you all here today and looking forward to a discussion. Any questions from the audience, please press the Q&A button. Don't use the chat function, use the Q&A, and I'll be moderating and appropriately directing the questions. So to get us started on the discussion, Sarah, if I may start with you. For the first time in a number of years, the cyber insurance market is hardening and premiums are on the rise. What do you think brokers can do to help clients from a risk management perspective to try and reduce their risk and potentially therefore their premiums?
Yeah, I mean, I think it's important to think about how cyber is sort of situated in the positioning between, other risks where we think about a hard market and a soft market. And if we sort of take a step back, if we compare cyber to other lines of business like property, there is fundamental change in the risk over time, but the threat itself, let's say fires and windstorms, they don't get smarter. They're not changing tactic all the time. So with cyber risk and the way that the market reacts, we've got this very real challenge of a risk where the threat itself is getting smarter and working actively to overcome our defenses. And then that risk affects technology, which is itself changing and evolving constantly. So, from an insurance perspective, we have losses that then can be tangible and intangible and long and short tails. So I think that the transition or the hardening of the market and the rise in premiums is interesting, but potentially a reflection of the length of time the cyber insurance market has been around, right? And the problem with cyber risk from an underwriting perspective is, of course, pinning down what good looks like with respect to that risk management. And that key role that insurance can play in incentivizing risk management means that it's so important right now for brokers to be that link in effectively communicating what underwriters are seeing as effective risk management tactics in the face of current risks. And when we look at, when we think about cyber insurance generally, we look at, just across, our book of business in Latin America, fewer than 10% of clients buy cyber insurance right now. And that means that fewer than 10% of clients are getting the benefit of the learning of the insurance industry. So I think a really critical role there for brokers to play is just effectively communicating and creating that sort of virtuous feedback loop, so that we can help clients to evolve their cybersecurity maturity. Now, of course, we also have a role to play as brokers in helping them to move those controls forward, advance their cybersecurity maturity. Marsh, as well as, of course, other brokers and consultants within the ecosystem have the capability to help with that. And then finally, I think there's an interesting role that insurance and insurance-based risk management can play, and that's around helping clients to quantify what their cyber risk looks like, and therefore, what is the value of those risk management tactics. So one way to measure that is, I spent more money on cybersecurity. Did my insurance premium get cheaper or not? But because it's a bit of a moving target, both in terms of the losses and the underlying risk, it's often about deploying resource in a smarter way versus just that sort of linear measurement. So I would say, really multifaceted role, but that role of a broker in this area should be that of a strategic advisor and the intermediary of a whole ecosystem of experts.
Yeah, thank you, Sarah. Clearly a key role that the brokers have to play within this value chain. What do you see as the reaction within local clients within Latin America to that risk management advice by the brokers when you're communicating, those risk management principles and advice? How do they react and how do they action those?
Yeah, I think there's two parts to that. I mean, there are clients who have potentially been ahead of the curve, who have been purchasing cyber insurance. And just like any line of insurance, when the market begins to transition in response to losses, i.e. the premium goes up or coverage becomes restricted in areas that have been difficult, the reaction of clients, of course, no one likes their insurance premium to go up or their coverage to get less broad. And so the reaction of those clients, of course, we have to work together to figure out a way through it. And really, if we communicate early and often and we give that good advice that can help them in their risk management goals, the reception is usually, I don't want to pay more. I don't want my coverage to get less broad, but I want this information so that I can become a better risk. And then conversely, we have clients who haven't yet purchased cyber insurance. And so we've had, with our team in Latin America in particular, we've had great success working with those clients pre-purchase of insurance to understand what their cyber risks look like and help them to advance along that maturity journey before they even approach the market. And frankly, we find that those clients who really engage with us before they purchase insurance, we're able to paint a much more holistic picture of what their controls look like to the market. And they're able, especially when they come to London, to get an even better result from the London market on their risk.
Right. Of course, you can't really have effective risk transfer unless you've quantified the risk upfront and you really understand it. Paul, would you like to comment perhaps on this topic from an insurer point of view?
Sure. Yeah, I think there were some really good points raised there. I mean, we have seen hardening in the market, and that is in response to the vast increase in claims that we've seen. But I just think that's proof of how useful a cyber insurance policy actually is. You know, my manager, who's been in the cyber market for 10 years, I think, said there was a time where they were concerned that cyber wasn't going to be seen as a useful insurance product because they weren't paying enough claims. And we certainly don't have that that problem currently. So I think that's one good thing. I think the brokers do have a role in educating the clients in providing the right information to insurers that we require to accurately underwrite the risk. It can be difficult, and if you just ask a CISO to go, right, give me a picture of your security risk, it can be difficult for them to put together the exact kind of information that underwriters are looking for. And when we learn really mostly from the claims we pay. We know a lot about the theoretical risks that are out there in the cyber space, but really you really learn the biggest lessons from the claims you pay. And we started to notice certain trends in where security is lacking in civil areas, and we see the same things going wrong again and again. So it's kind of a feedback loop for us in our underwriting to say, okay, this is where it went wrong previously. This is what we need to be looking for going ahead. And Sarah's exactly right in the analogy comparing, say, natural perils to cyber perils. Cyber threats evolve. It's sort of a cliche, but on a daily, if not hourly basis. So good security isn't fixed in time. So every year it will change, and that is the nature of the risk. And I think if you speak to any CISO, they would agree. So sometimes I think risk managers get frustrated. Well, we have to submit so much information every year. But I think if the risk manager speaks to the CISO, they will say, well, yes, actually, the cyber threats are evolving constantly.
Thank you, Paul. Yes, clearly a very dynamic topic that changes all the time. But certainly, as you noted, I think the insurance companies have a very insightful take on the whole subject, given the proprietary information you have within the claims landscape, right? And a very unique point of view that has low value for insureds around the world. And back to the point of the global nature of the risk and the concentration, having a volume and a concentration of that claims data within a particular market really enhances the level of insight that I think you and your colleagues in the wider market can provide. So going on to a slightly different angle, I'd like to go back to Sarah, if that's okay. Sarah, we've seen this week companies like Spotify saying that Silicon Valley employees can work from anywhere. Salesforce has said it as well. What impact do you think the increased desire for flexible working globally will have on London as a cyber hub, both for insurance and security?
Yeah, I mean, I think some of the comments that the Lord Mayor made in the beginning of this presentation really resonate on that topic. You know, the investment that the UK has made in enabling both the London insurance market to flourish and also to, incubating a lot of cybersecurity companies to provide some of those risk management tools, is really unparalleled in a lot of ways. So my view is that London will remain that hub for innovation and talent, and it's an iconic city, which makes an attractive place for people to come together. And flexible working and the demand to do so should be a good thing for many people to achieve better balance in their work life. Certainly at Marsh, we have a lot of conversations about how we can bring forward some of the benefits of flexible working. And it means also if flexible working becomes part of the norm and people don't need to commute into London every day, we can look at a wider talent pool, and that should increase the diversity that we're able to bring into the market. So that's a really good thing. But I think there is an intangible aspect of kind of the magic of the London insurance market, which is in the unplanned in-person interactions. It's that coffee shop effect. it's the social proximity of this diverse group of individuals. It's, enabling that really meaningful cross-class collaboration that happens naturally in an unplanned way. And I don't think we've found a really good way to completely, I think we can take interactions that would have already happened offline in a planned way online and duplicate that, and we can still have collaboration. But that sort of chance meeting effect that you get from the London market and all of that expertise coming together, it has that intangible benefit of becoming this really, really exciting hotbed of innovation. So I don't know, I think that technology can and should transform the way we work, and I think a lot of the investment companies have made, and the commitment to using technology to enable our ways of working, I think we should carry forward a lot of that efficiency. And I hope we can, have that wider talent pool. But in some ways, we still need that face-to-face interaction if we are going to bring the best of London to the rest of the world.
Yeah, some really good points there, Sarah. Totally agree with you. I mean, clearly there is a concentration of talent and expertise of different domains within London, and it makes for that very special ecosystem which we have in the City of London around the cyber insurance market. And there is an element of face-to-face within that, but also we've proven in the last year that we've been able to make it work remotely. I personally haven't been to my office more than 2 times in the past year, which I find extraordinary. But actually, yeah. I wanted to ask you something adjacent and relevant to this, which is, if we think now about taking this global center of expertise within City of London, and then thinking about the global market, Latin America, Asia Pac, etc., right? Isn't this new way of working and the new kind of flexible working and the way we use the tools now and becoming comfortable with remote working and collaboration, all that stuff, isn't it to an extent bringing that global center of excellence closer to some of these far remote geographically markets and allowing a better collaboration between Latin America and London, Asia Pac and London, etc.?
Oh, absolutely. I mean, I've been able to spend more face-to-face time with the members of my team that are based, in Latin America and in Asia than I probably ever would have over the course of the last year. So I think that that's really, really useful. The thing, and I think it can improve that collaboration. The thing that we've found maybe most challenging actually has been not replacing in-person interactions with online interactions for established relationships, but the establishing of those new relationships in an entirely online way, and especially onboarding new colleagues. So I found in insurance, there's a lot of on-the-job learning, and so we need some of that face-to-face in the office, on the job bit to come back in person. But absolutely, I mean, the way that we can bring colleagues together in a virtual face-to-face way has been a real game changer, and I'm personally going to take lots of elements of this away and into the future. Thank
you, Sarah. I'd like to move on to Alistair. Alistair, I'd like to bring you into the discussion with a slightly different point. So referring back to our report, a key point in the report was that together the UK market must take a lead in setting standards around sharing of data and helping shape the global cyber market as a result. What do you feel can be done in that space that's not been done at the moment?
I think the report really quite rightly highlights the incredible opportunity that we've got, given the existence of this, cyber insurance and cyber security ecosystems that we've already talked about and that the Lord Mayor and Sarah talked about earlier on. I think data sharing and collaboration between those two ecosystems is going to be really, really crucial to ensuring continued success. I think another area where data sharing is vital is between insurers and insureds. I think the report highlights that there is a trust gap developing between the two parties. And it's utterly crucial, I think, that there be no misunderstanding around the intent of cyber insurance and that the contracts are clear, concise, and offer the protection that the insureds need at this time of, I guess, unprecedented change in the cyber risk landscape. I think the final thing is that you quite rightly highlighted data sharing and the establishment of a sort of clear set of security standards against which insureds can be measured, because that doesn't exist at the moment. This will definitely encourage greater transparency and more rigorous underwriting and a robust means of pricing cyber risk. And I think that's really the only way that this market can become more sustainable and really crucially more attractive to capital at a time that it needs it most. I mean, we've already said that the demand for cyber limits is already outstripping supply in many cases. So I think the market needs to find a way of readdressing that balance if it's going to continue to thrive.
No, quite right, Alistair. Fully agree there. And taking that, I guess, that conversation slightly further in terms of what we can do with that data, the insights, the help we can give to the ultimate clients. We've seen recently a considerable rise in ransomware during the pandemic. And thinking about that particular risk and other evolving risks, and having the Latin America markets in mind, what do you think companies in Latin America can do to avoid becoming the next victim of this pandemic, you could say? It's another type of pandemic, isn't it, at the moment?
It really is, and I think the global pandemic that we're all facing has highlighted underwriters' minds, the potential for a cyber pandemic, which has brought ransomware even more front of mind for them. I think ultimately our approach, certainly at Aon, is always to start with advisory work to help clients develop what we call a sort of a path to resilience, because it really is only a path. It's very hard, indeed impossible, to ever achieve 100%. But it means investing money and resources wisely. That means achieving a balance between cost of cyber risk, where insurance complements security strategy. Those things can never sit in isolation. And if there's really 5 points that I would raise, I think the first is to take time to understand the architecture and landscape, and from there you can isolate mission critical assets. The second, I think, is sort of conducting formal reviews through assessments and testing. These exercises isolate areas of real control weaknesses and then help us to prioritize them for improvement. The third is probably to instate an enterprise-wide view to exposure. So encouraging not just the CISOs, but non-technical stakeholders to look at the subject matter through financial quantification and help them to really understand the value of risk. And by that, I also mean, board level buy-in to investment in increased protections. The fourth, I think, is to allow technical stakeholders to engage in market meetings and create an enhanced understanding of what insurance will do and what it won't do for an organization. And finally, we encourage clients to understand their actions post-loss. So by that, I mean developing protocols that coordinate forensics, claims, business continuity, and crisis response. And we think that a coordinated response there really is a key element to protecting stakeholder and shareholder value.
Alistair, thank you. Quite a comprehensive route map towards better cyber resilience is how I would summarize this. Paul, can I bring you back into the discussion at this stage, please? So I'd like you to comment on the topic of market maturity and how you view it at the moment in terms of Latin American markets. From an adoption perspective, cyber insurance adoption, we heard from Marsh earlier, less than 10%. What's your take on that? And also, what's the maturity from a cybersecurity perspective compared to other kind of regions and kind of industry groups that you work with? So can you give us a bit of a benchmark of some sorts?
Sure. I mean, from an adoption perspective, it's certainly lower than we see in other regions, particularly the big markets, the US, Europe, even Australia and Canada. It makes up about 5% of our gross written premium currently on our open market portfolio. And those that do buy tend to buy lower limits relative to the size of the company, if you measure that in terms of their annual revenues. Adoption rates and trends according to industry really follow the same trends that we've seen in other regions. So the early adopters tend to be financial institutions, retail, healthcare, technology companies, and utilities. Actually, we see a fair amount of utility business come to London. But there've really been two major headwinds in terms of adoption of cyber insurance in the last 12 months. I mean, no prizes for guessing. The first one being the pandemic, the economic constraints of lockdowns and other measures have meant that purse strings have been tighter. And so if you do have tight budget constraints, it's difficult often to justify or get sign off for a brand new insurance purchase, which cyber often is. And these tight budget constraints have been exacerbated by the hardening we've seen in other insurance lines, particularly property and D&O. So once you've paid your big rate increase on those lines, there's not too much left in the kitty for a brand new cyber insurance policy. So I think the biggest hurdle we face in cyber insurance in general, but especially in Latin America, is moving from the perception that cyber insurance is a luxury purchase or a nice to have, and it needs to move towards it being an essential insurance purchase, much like your property or your D&O. From a security maturity perspective, I'd say that the picture is actually quite positive from the business that we see coming to London in terms of cybersecurity standards. But I think the issue there is there may be a certain amount of survivorship bias in that observation. And what I mean by that is, as I say, most of the business that comes to London is larger business, risk managed business with dedicated cybersecurity teams, larger companies. And so they will inherently have stronger cybersecurity controls than, say, small to medium sized business that doesn't tend to make its way all the way to London. Also, we often struggle to get the cyber information that we require. And so it's usually those clients that have a greater knowledge of the risk, which therefore take more steps to secure themselves, which are more able to provide us the information. They're the clients that end up making their way into my inbox, across my desk, or at the box at Lloyd's, or still be in Lloyd's. Perhaps the clients, that are going through the application form, answering no to every question, just give up halfway through and don't bother. So I think the crucial point is making sure we can get the right information so we can accurately assess the risk when we see it in London.
Thank you, Paul. I see we have a lot of questions in our Q&A box, so I think it's time to start involving our audience. So I'll start with a question we have here from Nikola Kasajic. Question is, I'll direct this to you, Sarah, first. So the question is there any obstacle for Brazilian companies to be insured for cybersecurity directly with a UK insurance company?
Hi, sorry, I had trouble getting my camera on there. Yeah, so I think that, we would follow the same model as other financial lines placements into the London insurance market, in that you need to have a local insurer who is then reinsured by someone like Paul at TMK to provide the reinsurance coverage. And so, in consultation with your local insurance broker to kind of advise on what type of cover we need to get in place, and reinsurance broker, we can put solutions in place that fully involve the London cyber market. There are some challenges sometimes with respect to filing of forms with regulators and the scope of cover that can be provided. But again, that's something to kind of look at on a case-by-case basis.
Thank you, Sarah. But Paul, any comments from your perspective, or Alistair? Do you want to comment on this?
Yeah, I mean, I think it's Sarah quite rightly said. Brazil is reasonably unique in some of the challenges that we face placing business there, but it's certainly not beyond us, and we have placed very successfully cyber business in Brazil. It's just how we approach it, and the reinsurance route is absolutely the way to do that.
I would just chime in to say I completely agree. It is more complex given the regulatory framework out there, but it can be done and has been done.
And on the subject of regulation, we have another question here from the audience around LATAM regulators collaborating with the London insurance market and the City of London to allow for easier insurance placement. So does the panel have a view from a regulatory perspective what obstacles exist perhaps in allowing an easy placement? Maybe we can start with you, Alistair, on this one.
Yeah, I mean, I think we've, again, back to Sarah's point, we do have a set of local regulations, which means that you need lodged wordings and agreement on those wordings in order to write business locally. But, I think to the extent that local regulators can look at the risk landscape that local insureds are facing and provide an element of greater flexibility, because ultimately what they will want to do is to enable clients to cede risk to markets that are willing to accept it. And to any extent that they're able to look at making that easier for us, we would of course welcome it. But back to the point earlier on, we shouldn't see local regulations as being a reason not to create the environment to cede and accept risk. Thank
you. Paul, there's a question here, but actually I'll ask Sarah first and then I'll ask Paul as well. Why should companies that already have a D&O policy be buying cyber insurance as well?
I can see who asked that question, but I won't out them. So I would say all companies, whether they have a D&O policy or not, also need cyber insurance. But primarily, if you think about the risk of, the corporate governance risks that a D&O policy addresses, of course, if we're looking at private company D&O, that addresses some of the sort of entity liability risk. But cyber insurance and the benefits it provides, first of all, go beyond liability and can extend to first-party loss, so business interruption, the massive costs of reconstructing systems and data, also incident response, not just reimbursement for the costs of incident response, but also the connection to that whole ecosystem of third-party providers who can help in a crisis. And that from a lot of our clients' perspective is worth the premium of a policy in its entirety. It's being able to call a hotline and get help immediately to, become, to kind of get the business back online, to recover the business, to get advice about how to respond to an extortion attempt, to get advice on whether this extortion attempt is really genuine or not. Should we pay? What did your other clients do? All of that kind of in the moment advice, a reimbursement aside, is one of the critical reasons you want a dedicated cyber insurance policy. Now, I think it's, this is an interesting moment to consider. If I have a comprehensive portfolio of other types of insurance, do I need cyber insurance? And there are aspects of coverage that you might be able to extract from other policies, but that day is coming to an end, right? Because many insurers, both company markets around the world and also London market insurers, are systematically extracting cyber risk from their non-cyber portfolios. You may have heard of silent cyber, which is a term that simply describes cyber risk that's embedded in non-cyber policies, but wasn't really underwritten and wasn't rated for. So we're going to see any sort of residual cyber risk that's insured in non-cyber policies going away soon. So now is the time to get a dedicated cyber policy in place to make sure that you don't experience those gaps.
Paul, any comments on this?
Sure. I don't want to repeat too much what Sarah said. I think she covered it off nicely, but my immediate response would be try claiming for a business interruption loss under your D&O policy if you're hit by a ransomware attack, which we seem to see on a daily basis now. So there's a huge amount covered within a cyber insurance policy that wouldn't be covered under your D&O. I mean, my background is as a property underwriter, so I moved across about 5 years ago. One of the reasons I moved across was because more and more clients were saying that we've got this huge business interruption exposure that wouldn't be covered under our property policy because there's a material damage warranty, right? So there needs to be physical damage for the business interruption trigger, that coverage to be triggered. So that element of risk, I think now plays at least 50% of the time when you're underwriting, right? So in terms of your exposure, you're looking at the privacy liability exposure, but also the first party risk is a huge part of it now. Like I said, one of the reasons I was brought into my team was to kind of bring what I've seen from the property side of the business interruption losses into the cyber insurance market. So there's a huge amount covered under a cyber insurance policy that isn't covered elsewhere. And Sarah makes a really good point in terms of that other markets. It's kind of been a two-factor approach. One, regulators have said you need to get a grip on these silent cyber exposures because we don't feel like they're being underwritten, priced for, or monitored. And secondly, as the other markets harden, underwriters in the property liability space are more emboldened to apply cyber exclusions because they don't feel like they'll lose the business. When I left the property market, it was quite soft, and so it was a bit easier for the clients to push back on these things. But now, and especially from the 1st of January last year, with the Lloyd's mandate, we are seeing cyber exclusions across the board. So you're likely to have less and less cover as time goes on in other policies, making a cyber insurance policy even more important.
Yeah, we have other questions related to this topic, and specifically, we've got a question around kind of property material damage within major industrial companies, power companies, etc. Question is, how is the cyber market preparing to offer coverage to clients for physical damage as part of cyber policies?
Well, I think there's probably no one better to answer that than Paul, although, you know, I'm happy to sort of tee him up. But I think that to the points made earlier, silent cyber is necessitating pulling out a lot of coverage from the property market, and I think we can debate as to whether that's a good or a bad thing. But what it has meant is that it necessitates new and I think quite exciting solutions to come out of the cyber market proper to really make up for what those clients who have large property damage exposures are losing. And what I mean by that is, you know, if a property owner is convinced of the potential for a physical damage loss as a result of a cyber event, and they've lost that coverage, then they must be availed of a solution to either affirmatively cover that in a separate policy or indeed sort of buy that back. I mean, Paul, you probably want to wade in on this.
Sure, thanks, Alistair. Yeah, coverage is available. It's something that TMK are keen on, and we see ourselves as a lead market in Lloyd's for this product. I mean, myself and Alistair worked on an account not long ago, actually. It was a client that clearly identified the risk. They had an exclusion added to their policy at renewal, and so they were keen to investigate the potential for having cover, and we put together a policy for them which was happy. So they wanted $100 million of cover. That's where they viewed their risk to be, and that was a mixture of looking at the kind of cybersecurity controls, but also the kind of machinery breakdown, PMLs, MFLs, and they thought 100 million was the right kind of cover, and that was placed, and that was comprehensive, and they seemed pretty happy. And it's something we're getting lots and lots of requests for now, and far more bind orders. So there was, I would say, I mean, I've been looking at the cover for ever since I joined the cyber team, but when I first joined, lots of questions, people asking, not many bind orders. The 1st of January 2020 mandate from Lloyd's really pushed interest further, but I think it was a lot of clients were a bit late to the party, and they couldn't get their ducks in a row with sort of information or getting the budget signed off. And so what we saw is they delayed it for a year, and then this year we've seen a very large uptake in that kind of cover. And I think this is where Lloyd's and London comes to the fore, because these are, this isn't a typical cover under a cyber insurance policy. And so this is where Lloyd's kind of, and London in general, can come to the fore and offer these kind of solutions for this risk.
Yeah, if I could just add, I mean, one of the things that we've found to be critical to the success of finding a solution for cyber-triggered property damage risk is collaboration. And collaboration between, within a broker, collaboration between a cyber broker and a property broker, because that kind of placement, it isn't quite like a property placement, and it isn't quite just like a cyber placement. And I mean, to the point that we've appointed a dedicated leader to focus 100% of her time on cyber property damage placements during what I think Marsh believes will be this interim period in the market where this risk will shift into this cyber sort of gap marketplace. However, it does put clients in a difficult position, because if you have a client with a $1 billion limit in their property program and they're only able to buy back half of that amount in this cyber gap solution, they are disadvantaged. And so, our position is very much that the property market should continue to cover this risk, but it's a very real issue for clients in the interim. And I think the London market is the natural home for those solutions.
Thank you, Sarah. Moving off the topic of coverage for a moment and going towards, I guess, barriers to accessing the London market, and retention / deductible has been mentioned in particular by one of our participants. And the question / comment is that a number of LATAM clients are put off by the high level of deductibles that they see from the London markets. And the question really for the panelists is, how can we help LATAM clients to understand why those levels are what they are, and can they do anything to reduce these amounts? I don't know, Alistair, whether you want to start on this perhaps?
So I think there's a different way of looking at that. I think that, of course, any insurance contract is a two-way street. You must understand that, of course, insureds will have a motivation for purchasing, and insurers for accepting the risk. And what very definitely we see in London is that, certainly for larger risks, is that this is or certainly becoming more of a cat class of business. The market is not particularly there for the attritional frequency losses, and it wishes to lift itself out of that, what we call that sort of attritional zone, where it possibly can. Now, with that said, we can quite understand that there are lots of insureds in Latin America and elsewhere that do need coverage at lower levels, and of course, not just need it. It's a sort of a necessity based on the size of the balance sheet. And so, depending on the size of the client and depending on the industry vertical, I think there are all sorts of different retention structures that are available and potential to buy down. What I would say is that there are reasons, and there are reasons why in certain situations the market is setting itself or its attachment at a certain level, because it wants to be there for that catastrophic loss. It wants to be there for balance sheet protection, perhaps more than it wants to be there necessarily for what might be termed the everyday loss. But some of the other guys on the panel may have a different view.
I think that's a great point, Alistair, and I would just add to it that the other thing to remember for insureds that are considering a purchase of cyber insurance for the first time but get put off by a higher deductible than they might have in other policies is to remember most cyber insurance policies are set up such that you still get the benefit of advice from a claims perspective, an incident management perspective, and that connection to an ecosystem of very, very likely more competitively priced options to help you with incident response because you are an insured, even if you're paying for some of that within a deductible. So there is a not just intangible, a quantifiable benefit to being insured versus not, even if the deductible is higher than you would think about. So when you're doing that cost benefit analysis, that needs to come into play as well.
Yeah, and just from an insurance perspective, I think Alice and Sarah raised some really good points. Just going back to Alice's point about it being priced as cat cover, that's the kind of issue we have is that we can consider, we could consider lower retentions, which would make primary layers, working layers, responding more frequently. But that obviously then means an increase in premium to cover the increased expected cost of claims. And probably one of the biggest, pushbacks we get is, oh, it's too expensive. So we get this, it's too expensive, deductible's too high. Well, it's very difficult to offer a reduced deductible and reduce the price at the same time. So I think it's something you can offer, but it has to be priced in because you're going to have a bigger increase in frequency of claims. And I think Alice is exactly right. It is currently offered more as a cat cover type product than an attritional working layer where you're expected to claim off it every few years.
Thank you, everyone. I think it's time we draw the Q&A discussion to a close now. Many thanks to our panelists for their participation and their insightful comments. Many thanks to all the participants for the participation and the level of engagement and the good questions we received. I'd like to now hand back to the Right Honourable the Lord Mayor for closing remarks.
Thank you. Firstly, let me thank Max and the panel for their insightful contributions today. We have heard about the strengths of London as a cyber insurance centre and about the potential for cyber insurance to contribute to a deeper partnership with Latin America. The City of London Corporation is keen to unite all these strengths: a mature and expansive insurance ecosystem, a fast developing cyber security market, deep expertise, and an abundance of talent, allowing London's cyber insurance market to become a key one for Latin American business, helping keep us all more cyber secure. We've also heard about some of the challenges to overcome for the cyber insurance market, both here and across the globe. It is clear that we still have progress to make in unifying the expansive cyber security ecosystem and ensuring cyber insurance becomes clearly and universally defined. But we are confident we can achieve this, and that cyber insurance forms a basis for an enhanced relationship with Latin America. With that in mind, I want to thank the audience again for joining us today. We stand ready to help where we can to overcome the challenges and contribute as a convener in this space. I wish all of you in Latin America a very good afternoon, and to those of you in the UK, a lovely evening. Thank you.